Hello and welcome to this session in which we will discuss accounting for private, not-for-profit organization. Why do I emphasize the word private? Because we could have private and we could have government not-for-profit organization. We're focusing on private. And the problem with this is this. Most accounting courses, when you learn about not-for-profit, it's governmental and not-for-profit accounting. The course is called that. So what happened is this. Most students, they would always associate governmental accounting with not-for-profit. Yes, government do have not-for-profit accounting, not-for-profit organization, but also the private sector will have not-for-profit organization. Why is this important to distinguish? Because the standard setting body for private not-for-profit is FASB, the Financial Accounting Standard Board. It's the private accounting. It's private not-for-profit accounting. It's just like a regular business that desire a profit. They follow the same accounting rules. Also, when we audit them, they follow the same guidelines as private companies, the CPA. This is in contrast to government not-for-profit. Government not-for-profit, they follow GASB, the Governmental Accounting Standard Board. And this is why I'm trying to differentiate those two, that private not-for-profit, they use basically, in quote, regular accounting. They don't follow GASB. That's the point here. Not-for-profit owned or controlled by a governmental entity should follow GASB. Who are those governmental related not-for-profit? We're talking about city parks, recreational centers, like community recreational centers, a public library system for a city or for a state. Those are governmental related not-for-profit. And those, they use enterprise fund accounting, which we learn about in governmental accounting. Here we're not dealing with GASB, we're dealing with FASB. And you should breathe slowly now, because we should be familiar with FASB. FASB is accrual accounting, and this is what we will discuss. And that's why in this session I will go over the statement of financial position, because it's gonna reinforce this concept that we are using FASB, we are using accrual accounting. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course, such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. The first thing I want to discuss with you is we have different types of not-for-profit, private not-for-profit. We could have healthcare organizations like hospital, nursing homes. We could have educational institutions like colleges and universities. We could have what we call voluntary health and welfare organization, like the American Red Cross, Salvation Army. And by the way, we're going to have a recording about healthcare organization, maybe a short recording about educational institutions, voluntary health and welfare organization, and anything that doesn't fit under those three, private, not-for-profit. It goes under other private, not-for-profit, which is not governmental, like it'll be cemetery organization, labor union, and similar organization. When it comes to basic financial statements, there are three basic financial statements that private not-for-profit will have to issue. And those are statement of financial position, aka we know this as the balance sheet. Balance sheet, same thing as if I told you statement of financial position or the balance sheet, same thing. Statement of activities, think of the income statement. Now in this session we'll focus on statement of financial position. Then we have the statement of cash flows, which should be no surprise to you, statement of cash flows. Now, the voluntary health and welfare organization, they must also prepare something called statement of financial expenses. We would look at this in a separate recording. And this statement is recommended but not required for other not-for-profit, and we'll talk about it later on when we get to it. Another thing you want to know about private not-for-profit organization is who are the users of these financial statements and what's the purpose of the financial statements. So who are the users and what's the purpose? The users are usually the donors, or the community at large, but usually the donors. Who are the donors? The people that give you money. People that give you money. The purpose of the financial statements is to tell the users about the services that the organization provides, whatever those services happens to be, whether it's educational services, medical services, mental health, whatever the reason is, you got to let us know. Also, we want to know if the organization can continue, ability to continue. Think about if this organization wants to get a loan from a bank. Well, they have to show their financial statement. They have to show they have the ability to continue. Also, if you want to donate, think about donating to an organization. If this organization is going to go out of business, you're not going to donate to it. They have to have some sort of a plan that they're going to survive. And the financial statements, one purpose of the financial statement is to reflect that. Also, we want to see how managers are handling the money. Method the organization manager used to discharge their stewardship responsibility. Stewardship is the responsibility to run this organization, because not-for-profit, they don't have owners. They really don't have shareholders. The shareholders are basically, in a sense, the donors at large. And the donors, they want to know how well the people working in this organization are in charge of the money, of the asset that those donors are provided. What are we looking at here? We don't want the organization to be spending most of the money on salaries and perks for the employees that work there. Why? Because we're giving you money for a purpose, cancer, mental health, help, disadvantaged groups, so on and so forth. What's the basis of accounting, and do they use funds? Well, the basis of accounting, easy. Remember, they follow FASB, and because they follow FASB, great. It's accrual accounting. Accrual basis. Simple. Why simple? It's not modified accrual. It's not governmental accounting. It's a private accounting. And this should be great. This is good. This includes calculation and recording of long-term asset-related expenses like depreciation expense. We would report expenses. We don't use the word expenditure or encumbrances because those are modified accrual terms. Private, not-for-profit, we use regular accounting. Now, bear in mind that many private not-for-profit, they might use fund designation internally for bookkeeping purposes to keep track of different funds. But the financial statements, when they issue them to the public or they issue them to the outside world, they use accrual. They make no reference of the fund accounting that they're using internally. So just want to let you know this. They might reference this in the notes or supplemental disclosure, but the financial statements themselves are accrual. And the financial statements are the statement of financial position, as we said, we're going to cover in this session, the statement of activities and the cash flow. The statement of financial position is equivalent of what we know about is the balance sheet. We would report assets, liabilities. No surprise here. You are not required to classify them as current and non-current. Now, if you want to, why not? But you don't have to. You would show also long-term debt, long-term assets, just regular accounting. I know I'm emphasizing what's already known, but the reason I keep emphasizing this point because I want you to contrast accrual with modified accrual. This is accrual. We show everything. Now, when it comes to net asset, remember, on the balance sheet, we have assets, we have liabilities, and we have equity. Assets equal liabilities plus equity. Well, we really don't have equity for not-for-profit because we don't have owners. So what do we call equity? We call equity net asset. What's net asset? It's the difference between asset minus liabilities. Asset minus liabilities equal to net assets, which is the same thing as equity, net assets. Now, net assets, they have two categories. In the past, they used to have other categories. I'm not going to mention what we used in the past because the past is gone. We used net asset without donor restriction, net asset with donor restriction. We have two areas of net asset. With donor restriction, without donor restriction. Now, obviously, they're self-explanatory, but we're going to discuss them. Before we discuss them, let's look at an actual statement of financial position. And this is for Global Wellness Initiative. That's their balance sheet, December 31st, X4. And this is what they have. Let's look at their assets. Cash and cash equivalent, investments, account receivable net, inventory and supplies, prepaid, contribution receivable, fixed asset, interest and perpetual trust. Nothing, I don't see anything unusual about their assets. We didn't classify them to keep it simple. Let's look at their liabilities. We have accounts payable. We have line of credit, research grant payable, deferred revenue, total liabilities. Now let's stop right here. Then we have net asset. Under net asset, we have without donor restrictions and with donor restrictions. And we have those numbers. Now we need to talk about net asset without and with donor restriction, because I assume you know what assets are, you know what liabilities are. I don't have to go over those, or at least I hope not. If you have to, go to Farhat lectures, go back to my basic accounting. Otherwise, let's move on to net asset. Net asset without donor restriction, as the word suggests, contribution for which either no donor restriction existed or the restriction have expired. Once we have a donor without restriction, it means what? It means we can use the money for any purpose. It's no longer restricted. Another form of revenue that we can have is revenues for services provided and investment income. Usually those are without donor restrictions because we earn this money. Now, net asset without donor restriction can be separated further. So the net asset without donor restriction, although the donor did not make a restriction, but we might have board designated restriction. So the board might have some restriction or designated restriction, or it could be undesignated. It means basically not designated. We can do anything with it. So board designated net asset are net asset without, they're still without. Remember, notice here I put them under without donor restriction or set aside for a specific purpose. Rather, they are restricted by the governing board. The governing board can change their mind, so it's not a big deal. It's internally restricted. Purposes would include future capital acquisition or addition to an endowment. Basically, the company, the not-for-profit, they want this money maybe to install a new air conditioning system or a heating system in their building. That's why they want to restrict that net asset. Whatever the reason is, but it's internally. They can change their mind. It's useful for the stakeholders if the specific board designated purposes are identified on the face of the financial statements or in the note. And usually they will disclose this because the donors wants to know what are we using the money for. Now, net asset with donor restriction. What's with donor restriction? It means somebody gave us the money, donated the money, but they put some restriction on us. Contribution with donor restriction might be either temporary in nature. It means the restriction is for a period of time, then you're good to go, or that restriction could be permanent in nature, what we call endowment, and we're going to see what this is. Temporary in nature, it could be time. When time passes, when the asset could be used. For example, you cannot use this $1 million for 2 years, then after 2 years you can use it, or you cannot use those stocks for 2 years, then you can use them for whatever you want to. Or it could be restricted by a purpose or use, how the asset might be used. I'm going to give you $2 million, but it's restricted only for educational purposes, your educational program, or whatever program you choose for that for-profit. So you restrict the purpose or the use of the money. So it's restricted. Now, permanent in nature, permanent donor restriction required that the contribution held in perpetuity. Hold on a second. If you're giving me money and I'm going to hold it in perpetuity, what good is that money? Well, you cannot use the money itself. For example, I might donate $10 million to a private not-for-profit charity. They cannot use the $10 million, but they can use if it's money, the money will generate interest. If I gave them stocks, the stocks will generate dividend. Okay? So if I gave them, a building, the building will generate rent revenue. Now, this interest, dividend, rent revenue, whatever comes out of this, well, that I can restrict for a specific purpose. I cannot restrict not to be used. Well, if I restrict the original amount and the earnings, why did I give them the money in the first place? So I can restrict the principal, the original amount, but I could also restrict the interest, the dividend, the rent from that. I can restrict it for a purpose. You can only use it to maintain the football field or whatever you want to do. Or I could tell you, don't touch the principal, do whatever you want to with the revenue from that money. So when the temporary restrictions are met, these net assets are released from restriction and reported as an increase in net asset without restriction. So once the restriction is, so simply put, if we look at the balance sheet here, once the restriction is met, let's look at the balance sheet. It's very important to look at this picture. Notice we have donor with restriction. So once let's assume 10,000 is met the restriction, we debit this account and we credit this account. We debit donor with restriction to remove it, and we credit donor without restriction to increase donor without restriction. Basically, it goes from one account to the other account. Let's talk about endowment. Those are money that's not expendable. You cannot use it. It's held in perpetuity. It could be in the form of artwork, cash, land, or other assets that must be used for a certain purpose or and may not be sold. Just hold them forever. They might also be restricted for a fixed term. For example, you have to hold them for 10 years, then you can use them for whatever reason you want to. Not-for-profit can use at its own discretion after the expiration date. So basically they become non-restricted after a period of time if the donor chooses so. Information on net asset with donor restriction may be reported on the face of the financial position or disclosed in the notes of the financial statements. So if there's a donor restriction, you gotta let us know. And you have two places to do that. You can place this on the face of the financial statement if you choose to, or in the notes, but you have to show us. You have to show us this information because that's relevant for the users of the financial statements. Board designated endowment are not restricted. Remember, board designated endowment, it means the board is designated this restriction. Those are net asset without donor restriction. Sometimes they try to trick you. Board designated, you could always change. The board can always change their mind. FASB standard require that the statement of financial position provides the amount of total asset, total liabilities, total net asset, and the total for each of the net asset classification. Assets and liabilities be reported in a reasonable, homogeneous groups, and that information about liquidity be provided either by listing the asset and the liability in liquidity, or current or non-current, or both. For example, the Global Wellness Initiative financial statement present asset and liabilities in order of liquidity, if you go back and see it. Now, alternatively, relevant information about liquidity can be disclosed in the notes. You could also disclose this. If restriction on an asset that limits its use to a long-term purpose, you want to do so. You want to classify it asset whose use is limited, because the users of the financial statements, they want to know why you are not using this asset. Why is it restricted? For what purpose? Designate that. Show them that. Let's take a look at this multiple choice question from farhatlectures.com. Which organization sets the accounting and financial reporting standard for non-governmental, not-for-profit organization? Non-governmental means private. And what accounting basis should these organizations adhere to? So first, do they follow FASB or GASB? Non-governmental, they don't follow GASB, so they follow FASB. So we're down to A and B. The next thing we have to figure out is which accounting reporting framework they follow. Do they follow accrual accounting or do they follow modified accrual? Well, once you know it's FASB, FASB deals with private, what I mean by private, it's regular accounting, private businesses. Therefore, private businesses use accrual, and therefore private not-for-profit use accrual accounting. What should you do now? You want to go to Farhat Lectures, look at additional MCQs, whether you're studying for your CPA exam, taking an accounting course, studying for some sort of a professional certification. Invest in yourself. Good luck, study hard. FarhatLectures.com is always here to help you, and stay safe.